I'm Kailey Leinz from Bloomberg Television in New York, and I'm joined in conversation by Omar Aguilar. He is Schwab Asset Management Chief Investment Officer and Managing Director. So, Omar, we're going to focus a lot on the retail trader in our conversation, but first I just want to get your macro outlook. How bullish are you going into year end and on into 2022?
Well, this is very interesting, Kailey, because we have gone into the fastest economic cycle in our lifetimes. At the end of 2019, we were in that process of, trying to decelerate, and obviously nobody expected that we will actually hit a big pandemic that took the economy into a recession. And then we recover, quickly, very, very quickly. In fact, a lot of the economists, a lot of studies suggest that these ended up being more like a natural disaster where, tons of liquidity, stimulus program, fiscal programs, everything was attacking to try to solve the source of the issue, which in this case was a health crisis. And we did recover very quickly. And obviously the equity markets and all risky assets, took a significant amount of the lead on trying to get the economy back into shape. And so we're in that process where, going into the summer of 2021, we were really just, hitting in all the strides. Economic growth was very strong. We saw equity markets doing very well, corporations, having plenty of liquidity, record earnings, right onset of all these different pieces, until we started to hear about concerns about supply disruptions, where we ended up having these imbalances, between supply and demand, when we had ports that couldn't get the capacity to deal with all the goods that were coming, and the demand was just in there. So we combined that with the fact that we had the delta in the middle of it, put us into a place where we are, going into the fourth quarter, is still growing at a very decent pace, but I will probably say in one word, decelerating. We're decelerating the global economy. We're decelerating the rate of inflation. We're decelerating the amount of consumer demand, which is probably the main concern I have, going into the holiday season. And we're decelerating, all going into the end of the fourth quarter, which obviously puts us in a place where we're still in the recovery period. We're just not going at the same pace as we were, right at the beginning of 2021.
Yeah, so I'm wondering if that means that you think the buying of the dip, that behavior we have seen so frequently over the last 18 months, is going to stop working.
Well, we have recently done a lot of the work on behavioral finance, and it's something that we do at Schwab a lot, to just educate investors on trying to take the emotions out of the market and focus on the long term. We just went through a month where we had a significant negative return in the market, which is something that investors have not been used to, at least for the last several months, since March of 2020. So when that happens, that mentality of buying the deep, gets into, is it good time for us to just repurpose, those assets, to rebalance? And there is a temptation to time the market. This is a great opportunity to get in. This is a good opportunity because things are actually cheaper than they were, 5% ago. And our process in educating clients, always is that timing the market is very difficult. You always try to think about your long-term goals and try to do these weighted dollar average, where it's not necessarily right a good time. Tomorrow there will be another opportunity. It is better to actually find those assets that you want to buy and have a strategy that allows you to systematically get into them.
Well, Omar, this is where the retail investor part of this conversation comes in, because it has been the retail trader that has driven so much of that dip buying. Is there signs that retail behavior is changing, that their desire to take on risk is waning the farther we get out from post-pandemic fear?
Well, it's kind of interesting. We are very happy and very proud to see that there is even more and more interest by the retail investors to get into the markets. It is always good to have more investors, thinking about how they can invest their assets for the long run. You're right. And if you think about, what has transpired in the pandemic, there was an excess level of savings that were accumulating during the process of 2020. In fact, studies and research shows that it was probably 4 times more excess capacity than in a normal cycle. So what that means is that there is a lot of savings. The consumers and the investors deleverage. They reduce the amount of debt with the amount they saved during the period of 2020. And therefore, they have more time sitting in their homes. They have more time looking at the screens. They have more time. And therefore, their ability to actually start to get in and use those excess savings for investing was something that was very tempting. And they, in fact, they did. You're very right. Investors that started in 2020, were more interested in taking positions, in things that they had never done before. Now, what is interesting over the course of the last few months, Kailey, is that has decelerated too. The deceleration of interest in what was so-called the meme stocks, started to just change right, at the end of the summer, not at the same pace that was at the beginning of this year.
Yeah, well, Omar, to your point, you talk about kind of the liquidity that has been out there for the last 18 months. You have the monetary policy side, but also the fiscal side, and the fact that stimulus checks put a lot more money in people's pockets. As those impulses fade, how does that affect how retail investors are going to be involved in the market going forward?
Well, the majority of investors that actually have gone into the market have actually seen positive rewards. The fact that you have still a bull market despite, the last, set of volatile days is that, you can actually see that reward goes into it. There is a very typical behavioral bias called recency biases that basically puts a lot of weight in your recent experience and recent information. And therefore, a lot of those retail investors, the new to invest, that ended up, investing in certain assets, they actually got rewarded. And therefore, that becomes in a snowball effect. They will continue to just go into that process. Now, what is interesting, though, is, and this is a big part of what here at Schwab we try to do, is we're very interested in continue to educate clients to know whether or not it's an actual investment that will work for their risk profile and for their wealth planning. And that's a big part of, what we try to do, because, the excess savings could easily go away if they actually don't get channeled to the right place. What is good about the studies that we have shown with the new investors, especially for those new to invest retail investors that are all kinds of ages, is that over 90% of those investors said that they actually want to learn more about investing after their first experience. So if you think about it, new investor that came in, started to invest in a meme stocks or in a SPAC or in any other areas, got rewarded. Now they got engaged, and all of a sudden they want to get more tools and research. And that's basically very good for the market, and it's very good for the investor in general.
So tell me how you go about that education, because talking about the meme stock phenomenon, one of those things that inspired was greater scrutiny from regulators and from lawmakers who want to protect the quote unquote uneducated investor and make sure that they are able and enabled to make smart investment decisions. How do you at Schwab make sure that they have the information that they need?
Well, we provide a lot of information to clients and research, and we always encourage to talk to advisors. The main component of what we try to do with retail investors, whether it's a do-it-yourself or whether it's somebody that seeks advice, is basically putting together, a component that allows them to exploit, what are the options that they have. A big part of that is understanding their own risk profiles. In other words, trying to understand what is that you're actually going to use those investments for. And that is probably the most important piece of it. What is interesting about the studies that we have done with retail investors, especially for those new to investing, is that the majority of people that try to get into investing, they're actually thinking about the long run. They don't necessarily execute in that way, but they actually care about the long run. They actually care about saving for retirement. They actually care about saving for generating income in the future. But what they're trying to do is trying to figure out what is the best way to do it. And, providing, research information, access to a financial consultant, access to digital tools, and that's probably key, of understanding how those digital tools can drive them so that they can actually get to the right investors. Asking the right questions through those digital tools is a key part of, what we do at Schwab to continue to, guide those investors to the right, place, to the right profile.
And this is all part of that kind of democratization of finance conversation. The fact that retail traders just have a lot easier access to the financial markets now than they did, say, a decade ago. Are there inherent dangers, though, that come with that?
Well, it goes back to the behavioral aspect of the market. If you actually think it's actually very good for people to be invested, that's for sure. And there's no question about it. And the more people that get invested, the better we all are as a society. Now, you're completely right. The access to information, even for professional investors, is actually overwhelming. You can actually have information through social media. You can get information through different tools, your computer, your smartphone. And what that does, it triggers those behavioral reactions that you have to information. The most difficult part and the most prevalent thing that investors have today is the anxiety that comes from not knowing what to do with all that information. If you actually think about, all of a sudden you have an investment, you have earnings release, you have economic release, you have access to everything that in the past was probably not as simple to get. So what we have seen normally is that you actually have two types of behaviors. One is when you actually see market volatility, there is an emotional reaction that tends to drive a lot of the questions that we get. If you think about information that you get, inflation, hits, all of a sudden the market volatility goes in. People talk about, potential issues with regulation around, certain areas of certain stocks immediately there. The FANG stocks was another one that we have seen recently. And then going into that piece, the information that gets you, a lot of what we have to do is continue to educate of not necessarily overreact to every piece of information. Reduce the amount of consumption of everything that comes in and focus on that long-term plan. And that's the reason we encourage every single of our clients to try to come up with a financial plan that allows them to have those so that they can mitigate those over and under reactions that they have to information.
Yeah, so talking about the Schwab specific angle, how have you had to evolve to meet this moment of easy, accessible markets and information? What changes have you had to make to the products and services that you offer?
Well, it's a very interesting. We believe that the world, continues to be rewarding digitalization and personalization. Those are the two words that we continue to give to access. Schwab has always provided options for investors. We are, trying to lower the cost and trying to give access to everybody that wants to be invested in the market. But as such, we also believe that investors continue to actually, put money to work with their values. The concept of personalization is something that continues to evolve. If you think about the evolution of the phone, when you actually, had way back in the way, just, landlines, all the way through smartphones that you can create, you put your pictures, you can put your, little, pieces in there that becomes yours. The world of investing has actually evolved to that area. Now, that is not something completely new, but it was only available for ultra high net worth and high net worth investors for a big fee. What Schwab is actually doing now is in the process of creating more tools to give access to investors so that they can actually have access to tax management, to can have access to, ESG investing. They can have access to different set of low cost, index and ETFs so that they can actually create their plan and they can actually figure out what is good for them. But that concept of personalization where you can be investing and at the same time follow your values, think about what you want to have, mission, is a big part of the driver of what the future might look like.
How have you seen the values that your clients would like to focus on change over time? Is it now more leaning toward ESG or is it something else?
Well, there's all varieties, and that's what makes the markets rich. Not everybody necessarily has migrated towards believing that ESG provides a big value in terms of performance or in terms of return or in terms of value for their equities. That's something that investors have a preference, and preference there. But there is a significant increase in interest in understanding how the ESG, environment evolves over time. Not everybody, believes that ESG is the same for everybody. It goes back to my comment of personalization. For you, the environment may be more important than social events. For me, social may be more important than some quality or governance issues. So all of a sudden, the concept of how people apply their views on ESG is not a one size fits all. It basically has to do with how investors put those money to work where they believe, trade-off between their value of their equity and their investments together with what their mission and their values are. And that is the reason why digital tools and customization become so relevant for the next generation of investors.
It all comes down to personalization. Omar, thank you so much. It was great speaking with you. That's Omar Aguilar, the Chief Investment Officer of Schwab Asset Management.